So a little bit of breaking news with Owen Lee. Owen, you talked a little bit on the Breakfast Club this morning
Hmm.
about the Vantage score, and we might can start using that sometime in the near-ish future, or maybe right away. And the idea behind this is maybe drop the price of the credit scores because they've just gotten outrageously expensive. Bring us up to speed.
Well, here's really where we are with this, Carl, and some very interesting news. So, if you are on X or Twitter or whatever you want to call it, and you want to follow somebody very interesting, I would suggest that you follow Bill Pulte, who's the director of the FHFA,
Okay.
Federal Housing Finance Authority, and so he is the conservator currently for both Fannie Mae and Freddie Mac. So just think of him as the CEO of Fannie Mae and Freddie Mac. Due to a Supreme Court decision about 4 years ago, the FHFA director is now basically a political appointee. And Bill Pulte tweets often. He tweets or posts, whatever your flavor, probably 3, 4 times a day, and really is kind of playing to an audience of one, which is the President of the United States. And so about a month ago, maybe not quite a month ago, he tweeted, "Big news coming in 1 to 3 weeks." And we
Okay.
all saw that. I posted about it on LinkedIn. I follow this stuff very closely in my capacity as vice chair of the MBA. This is a huge issue for the Mortgage Bankers Association, rising credit costs, right? We all know every loan officer out there has gotten some type of credit increase, likely 2 or 3 or 4 over the past 3 years due to the cost of the credit bureau increasing 400 to 700%.
Yeah.
And so Bill Pulte tweeted the following. Let me just give me 1 second here. I just had it. Here it is. Effective today. Now, this was Tuesday of this week. He posted, effective today to increase competition to the credit score ecosystem and consistent with President Trump's landslide mandate to lower costs, Fannie and Freddie will allow lenders to use Vantage 4.0 score with no current requirement to build new infrastructure, parenthetical, stays tri-merge, meaning the infrastructure stays tri-merge. So what is he trying to do with that? He's trying to increase competition, right? Regardless of what you think about the credit bureaus and FICO to a lesser extent, but the credit bureaus are responsible for a lion's share of the increase. Regardless of what you think, credit scores have gone up, and we have an oligarchy, an old-fashioned oligarchy, right? You can't close a loan in this country, practically speaking, without pulling a credit score from all three bureaus. You need a tri-merge. You can't price a loan. You can't, the AUSs of Fannie and Freddie are supposedly agnostic to the credit score, but you can't price a loan without a credit score. You can't get mortgage insurance without a credit score. You can't do FHA without a credit score. You can't, all these things. And so you can't buy or sell a loan largely without a credit score. So all of these things, they're trying to introduce competition because this forced oligarchy allows them to raise the prices to the degree that they have and then talk about it in their SEC filings. So you don't really have to listen to Owen Lee. You don't have to listen to Carl White. Just Google it, right? These are filings that they make once every 90 days when they report their financial report. So they're a requirement of all publicly traded companies. So they're trying to increase competition. So that is a net positive for the industry. But man, there are 100 practical questions that just kind of got skipped over in the rush to get there. Like, how are we going to price a loan? Because currently we only have pricing tables, those loan level price adjustments that are based on credit scores. How are we going to get credit or mortgage insurance
Mm.
without a credit score? Most of the loans in this country are not delivered directly to Fannie and Freddie. They might be held on a bank's balance sheet, or they might go to like an aggregator, like a PennyMac or a Mr. Cooper or a AmeriHome or a NewRez or a company like that, who aggregates them and then sells them to Fannie and Freddie. What are those companies going to do with this Vantage
Well,
score?
I got a question for you. So the
Yes, sir.
purpose of doing this, according to this post on X, the purpose of doing
Mm-hmm.
this is to make it a little bit more affordable because it's gotten just crazy on the prices
Right.
for the bureau. And now, if I have stock in the bureaus, I think it's awesome, right? This is, but in the
Yeah.
part of the industry you and I are in, I mean, it's a real problem. Like in the amount that has gone up, way outpaced inflation. So, but you told me a little earlier. So this Vantage is the competition, but come to find out, the Vantage system is owned by the credit bureaus. So it's like, I don't know,
Yeah.
it's like I'm buying cereal and Kellogg says, "Hey, we're going to introduce a new cereal to drive down prices." And they're the ones introducing it, and 90% of the cereal on the aisle is already theirs. Like, they're not going to be competition to themselves. Is this just a ruse, or does it actually somehow decrease does it make it more affordable through competition? How do they compete with if they own both of them? How do they compete with themselves? I mean, that'd be like the Mustang competing against the Taurus. It's the same company,
Yeah.
right?
Well, correct. And so they own 90% of VantageScore, the three credit bureaus.
Okay.
So they're kind of hedging their bets, right? So we'll see what happens. This is about pricing, right? This is what this is really about. Now, I will just say this about VantageScore. VantageScore purports to more accurately judge people who are historically disadvantaged or discriminated against by the tri-merge. This would be people that don't use credit very often.
Okay.
Because sometimes if you don't have a history of using credit, you're going to have a lower credit score. These are people with medical debt or people that are somehow underrepresented in the financial system.
Hey there. Hey, if you're loving the tips so far, be sure to hit that subscribe button right down there and then tap the little bell so that you never miss out on more free cool tips coming your way. Also, I would love to hear from you. Drop a comment beneath there. Let me know what you think or tell me what you'd like to hear next.
So Vantage does have some advantages, if you will, that are promising, but have kind of, I'm optimistic, but I think we have to use the score for a couple of years to figure out how much it actually helps and how much it actually captures what
Mhm.
it claims to capture. We got to prove it out. Yeah, if the Vantage score goes up 700% in 2 years in pricing, that's going to be an issue. I think what this really is the official Washington coming out of, hey, credit bureaus, we see you. We see what your pricing changes have done by increasing costs to the housing market, and we're going to do something about it. Now, the problem is this: is think about Director Pulte or Secretary Turner, the HUD secretary. They're trying to do something about this. It's like they're playing 7-card stud for those poker players out there, and they only get dealt 3 cards or 4 cards,
Mhm.
right? Because they have 3 credit bureaus and they have the Vantage score, and everybody else has 7 cards and they only have 4, right? So they're not playing with a full deck because we've had this government oligarchy, which largely went unnoticed, or I should say government-sanctioned oligarchy, which largely went unnoticed because credit reports really didn't go up that much. But with this gigantic increase of FICO, raising their fee from approximately 65 cents per poll to $5 a poll, and then the credit bureaus overlay a percentage on top of that, and they didn't change what that overlay percentage is. So it just extrapolated a multiple that was very large. and it's caught the eye of Washington D.C. and I think we're going to see it. This is something that
it just seems
is
funny
going to
that
be going on for months.
it just seems funny that their answer to it is to have the same company come out with a new car to compete against themselves, which I mean just makes on a business level.
Well,
It seems like it's
the,
a visual and not there's no like what's that old
right.
commercial? Where's the beef?
Yeah, but you have to remember though, they're trying to. This is almost like a physician prescribing a drug off label, right?
Yeah,
Where he or
I get it.
she writes the prescription for a different purpose than
I
what the
get it.
intended use was. When Vantage, it takes years to develop the logarithms and whatnot to do these. Vantage was not originally created as a substitute to compete with the tri-merge on price. Vantage was originally created to capture those folks who are underrepresented by the current
Mm-hmm.
credit system. So they're really taking a vehicle that was,
Mm-hmm.
designed to go to the space station and saying, let's send this thing to the moon because
Yeah.
it's the only thing we have that's even close to being ready.
I get it. I get it. All right, so that
So,
makes more
yeah,
sense. So the purpose of the Vantage was to help more people qualify that maybe would have a hard time
correct.
under normal circumstances. And oh, by
It
the
was
way,
not, yeah,
it's cheaper.
it was not designed, yeah, it was not designed to introduce something that would compete on price
I
with the
got it.
credit
Okay.
bureaus or
It just oh,
FICO.
by the way, it's
Yeah,
cheaper. I got it. I got it. All right,
it's
that makes
here
a
and
lot
we
more
might be
sense.
able to use it for this.
That makes a
Yeah.
lot more sense. All right, last question. I know you got you got to go. You got things. You got a busy schedule today. Um, kind of the last question. So can
Yes,
uh,
sir.
can Washington force them to decrease their prices? Because I've always thought, I mean, the credit bureau's got it going on, right? I mean, kudos to them,
Yeah.
right? Because here's something that you
Yep.
have to buy. If you want to buy a
Mm-hmm.
house, you have to buy this. Who says,
Mm-hmm.
right now, I don't know. I think a soft pull, one bureau soft pull, somewhere around $30 or something like that. Hell, they could charge 200. They could have a tri-merge
Mm-hmm.
cost $1,000. What are you going to do about it? Like, is there
Yep.
can DC step in and go, okay, guys, you're selling plywood during a hurricane, you can't price gouge. Stop it. We're going to reset your price. Do they have the authority to do something like that?
Well, that would be under the purview of the Justice Department. So you would have to get the Attorney General or one of the Attorney Generals, probably of, a major district like Washington D.C. or New
Yeah.
York or something like that, to really take an interest in what's going on there. And it's getting to the levels where that might happen. I don't think there's a lever that they can push. The biggest thing they could do is to either have the Justice Department start to take a look at it, or to have Fannie and Freddie, HUD for FHA, VA for veterans, probably go to a single bureau. If you pull instead of a tri-merge, if you really look at like what an automobile dealer pays, auto dealer only has to pull one bureau. So the bureaus compete for the automobile dealer business. The competition is massive. So they pay somewhere between 10 and $15 probably for a single file pull. And, we're paying somewhere between 130 to 170 for a tri-merge. So if their cost is 12, a tri-merge in theory would be 36. Our cost is 5 times that. But, rightfully, the people that buy the mortgages, the people that insure the mortgages, they're saying, hey, are we pricing our product correctly if we only have one bureau to look at? It's a valid
I can see that.
question.
Yeah.
Yeah, so we got some work to do in this
Yeah.
industry, and but I think the biggest thing that comes out of Director Pulte's tweet is kind of like the eyeball test. Like, hey, credit bureaus, we see you, and we see what's going on with this, and we see how it's driving up costs, and we're paying attention to this. So this is something you gotta stay tuned about, because Carl, we're in the top of the second inning on this issue, and we got 7.5 innings to go, and so pay attention, join the Mortgage Action Alliance, follow Director Pulte, follow me on LinkedIn. I post about this frequently because I think it's fascinating, and it really, really affects our industry. So listen, we have to advocate for ourselves as an industry, and if we don't do that, we will get steamrolled. It's that old Washington D.C. axiom that I don't really like, but it's very true, which is, in Washington D.C., you either have a seat at the table or you're on the menu, and that's very true.
Yeah, good stuff. All right, be sure to follow
Yep.
Owen on LinkedIn, and it's Owen Owen Lee Lee. Lee is the last name, and we'll put a link if you're watching this on the web. We'll put a link in the show notes to follow Owen on LinkedIn, like I do, because that's where I get a lot of my great information about what's going on in the industry. Because hey, marketing's a big deal, but boy, if we don't pay attention to what's going on in the industry, what we're marketing might be a little bit harder to sell. So appreciate everything that you
There's
do.
a lot of change happening and a lot more change coming. So we got to pay attention, and we got to advocate for our industry.
Good stuff. All right. Appreciate you, brother.
All right. Thanks, Carl. Have a great day.